Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 30th, 2024. And I was wrong in thinking that we were going to get the move up in Bitcoin and the rest of the cryptocurrency market over the weekend. But I still maintain that this move is happening. And it is going to be the final move up before a larger move down. If that all sounds interesting to you, then watch until the very end. I hope everyone's having a great day. Let's get into it. Let's start off with Bitcoin on the 4-hourly time frame. Okay, the price structure or the pattern of our B wave is still intact. All right, nothing's substantively changed. Materially, we're all good and we're where we were, right? Nothing's really changed. We're in this B wave, right? This B wave, and that's what I would call B of B, and I'm going to break it down for you in just a second. But you can see, like last we spoke, we were around here, and now we're around here. Nothing's really changed. This is still a B wave that has all but maintained its level of support. And to finish this B wave, we still need a move up, and that move up needs to come to a minimum of 100 or 102K per Bitcoin. I'm going to show you why in just a second. For those of you who are new to the channel, welcome. Thank you for subscribing. I'm going to show you why that is the minimum target for Bitcoin, 100K. All right. So this is still an A wave. It's still a corrective impulse. Okay. And so if you measure this with the Fibonacci retracement tool, you can see from top to bottom, you see that the 0.5 and the 0.618 stands respectively between 100K and 102K. The reason our minimum target for Bitcoin on this upside move is 100K is simply because the minimum retracement for a zigzag is the 0.5. The minimum retracement for a B wave in a zigzag is simply the 0.5 Fibonacci retracement level. The maximum is 100, or is the 0.618, which represents 102K. So all that to say, I don't expect Bitcoin to come anywhere past this level. It can wick a little bit beyond that, but I'm expecting a top around 100 and 102K. I do not believe that this is the move of all moves that takes us into a bull market. No, not at all. And qualitatively, if you've been watching this price action, you should also understand why that wouldn't make any sense. As low as we've been on this B wave, right? B of B. Let me break this down really quickly, right? So this is our A wave, our initial A wave, right? And all of this right here is our B wave. So basically, this is A of B. This is the initial break of the B wave. You could call this A of B. All of this zigzag, or sorry, this flat correction, this three-wave move, right? This three-wave flat correction is B of B. What we're waiting for is the final move, which would be C of B, or the final impulse, which is the final move of any corrective structure, okay? So at the end of the day, your B wave looks like this: 1, 2, 3, okay? That's just common sense, what you get. Any corrective pattern comes in flavors of 3. Again, this is A of B, this is B of B, and this would be the final wave of your B wave. Once that B wave is complete, now you resume your corrective pattern. So this is another reason why when people are telling you, guys, if you're not buying Bitcoin now, you're crazy, because we're going to go up in the bull market. We're going to smash 102K, and we're going to smash this. We're going to smash that. We're going to go up to 120, 50, 60, whatever they say. That doesn't make any sense given what the price action is showing, what the charts are showing. The charts are showing an initial break of structure, a larger, so you got to zoom out. The larger initial break of structure happened. This has been a reaction to this. There's always action and reaction in charting, right? This is your initial break. This is the counter. And so if corrective patterns come in flavors of 3, which you can prove to yourself on back test, right? With a high degree of probability, you can understand that very quickly because it always works out that way. Then you're looking for this. That is so high probability. Nothing's 100%, but that is super high probability that once whatever's going on here finishes, you're going to get this. Then this is what I've been saying is the beginning of the big move down, right? And when I was saying qualitatively, it doesn't make any sense for us to just go up like this from here, right? Because first of all, it looks funny. If you have a high number of chart hours, meaning if you look at charts a lot, you don't see that. It doesn't work that way. A recovery, a V-shaped recovery, meaning when price recovers instantaneously after a drop, it doesn't take time like this. You don't get that. That doesn't look right at all. Okay, that aside, my main point in saying that is you can feel the weakness of the asset here. I don't know how else to say that. If you've been watching this price action and you see how much it struggles to gain momentum anytime it wants to go up, it's just any rally is completely killed off. You can feel there's a feeling to the price action being weak. It's kind of a prelude to what the larger momentum is. The larger momentum of our corrective pattern is bearish. It's down, and you can feel that here. I don't know how else to say that, but on a smaller time frame, if you've been watching, you can feel how there's little verve, there's not much liquidity, there's not much strength, and so even a move up you should be very cautious about just on feeling. And again, that feeling I would characterize as looking at the price action on the smaller time frames and seeing how every rally is kind of nullified and nothing really takes root, and it's taking a while. It's really taking its time, and it's going down to the depths of this structure here, really the bottom of this structure, just to get any liquidity, just to complete this B wave. And you think that it'll have enough liquidity to go up? No. The liquidity necessary for Bitcoin to break this resistance, this 40-day resistance, right? Let's zoom out real quick. Bitcoin was in this channel for about 40 days, 37 days to be exact, right? From here to there. I measured it recently. That's how I know. You would have to break this resistance. Old support, right? Support for 37 days, lost at this point, 37 days in, and now it's resistance. In order to be bullish, this would have to break. And it would have to break in a very decisive way. And then you would regain that level and go on. You're telling me that we have that kind of liquidity here? No. You got to go way lower to grab that liquidity before you break that level. And people don't understand just how low you have to go. The chart's showing you the level that you have to dip down to gain the ammo, to gain the strength to break up. And it's going to be to the 66 to 70K level. That's not a bearish look. Again, for those of you who just joined, welcome. Thanks for subscribing. That's very bullish because on a high time frame, this is all so bullish. You're talking about a multi-year inverse head and shoulders bullish reversal pattern that broke out and is now retesting. Super bullish. Why are people thinking that retesting 66 to 70K is bearish? One, because they're impatient to, make life-changing money. I get it. And maybe they're on the wrong side of a trade and they would not want to entertain the idea of Bitcoin going so low. But that, relatively speaking, is not at all low given what we're seeing here. Okay? That's just a normal thing. This green line right here, for those of you who don't know, that's just my first target. I think we get a bit of a bounce there before we reach it. Okay, that's a whole nother thing. My update today is just talking about, I have other videos where I break down that whole thesis of why we're going down to 66 to 70K and how 75.6 or 76.5, whatever it is the first target. I've got that explained at length in many videos. One such video is called The Great Crash of 2024. Maybe I should rename it The Great Crash of 2025 because it's taking much longer than I thought. But I still believe that the trade here is up, okay? At least in the short term, and then down, okay? Bitcoin to between 100 and 102K, then down a lot, okay? We can see similar things in other assets, in major assets. Let's look at Cardano, okay? And this is not to analyze Cardano per se, it's just to show how you can see similar price action in another asset. You can see Cardano has itself been in a type of, let's get rid of this right here. Cardano, if you look at what it's been doing, it's been very bullish. And as you can see, it hit a major resistance, major resistance. This resistance was about 650 days, right? You can see how we hit it right here. 650 days of resistance. So obviously you have some sort of reaction there that we got. Now, is it finished? Very unlikely. What do you know about channels and how you can leave the boundaries of a channel? Typically, you gotta come down to the midline, the heart line as some people call it. That's where once you retrace down to the heart line, and there's a mathematical reason why the heart line, the midline, is where price action comes down. It's because that's the median fair value of the asset over a certain length of time. So if you come down to this level, that is where, buyers and sellers agree is the fair value of Cardano. You consolidate there, then you can finally leave. But any higher, you can't really. So we would expect at the very least a retracement down there, and we haven't gotten that. But zooming in a bit, and my point in showing you Cardano, I wanted to zoom out to show you that it's at resistance, okay? So that you wouldn't be surprised at seeing a larger retracement. But you can see that you've gotten some sort of beginning of a larger retracement. And I think that's the last move of it, okay? That's the last move of it. It makes sense. You're in an initial break, counter, secondary break, counter, boom. That's the pivot. So on the smaller time frames, that looks very much like what we see in Bitcoin. If you go on the hourly time frame, you can see you have, let's go on the 4-hourly. You have a very clear flag, a bull flag, okay? This is, or an Elliott wave zigzag. This is the initial break. That's your A wave, okay? It's a corrective pattern, meaning, why would you call it a corrective pattern? Because it's against the trend. The new trend has been established. The new trend is down right here on the larger time frame. Okay, you can see trending counter, trending counter. Okay, this is still counter. The trend is still here. So when you're looking at this, this is your A, this is your B, and you're looking for a C, just like in Bitcoin. Again, trend, counter, trend. This is all counter. You probably get some sort of pivot here before the drop. And again, I would target the midline of the 700, almost 700 day channel as the target for the drop. That's another reason why, if you look at Cardano, you can expect in the cryptocurrency market a small move up before a larger move down. Let's look at one more just to kind of round it out. And I really like doing this exercise, not this in particular, but sometimes I have a trade thesis in mind for Bitcoin and for what should happen. And I'm like, well, if this is true, I should see it consistently throughout the market, not just in, whatever asset I just analyzed, right? You're seeing similar things. Typically, when you see that, it's a high probability trade thesis, or, it's a high probability trade thesis that's likely to play out. Let's look at Ethereum and get out of here. So, again, zoom out just to set the to understand what's happening. And quite clearly, you can see here, you are at a major resistance. That resistance in Ethereum is 4,000. You came up, you hit it, and you hit it twice, and you hit it 3 times. Okay, so it's kind of quite clear that $4,000 is a resistance. And in order to break it, you need more liquidity. Kind of what you're doing with Bitcoin. You're up at resistance, you reject it from it, and Bitcoin is 108K. You reject it from 4,000 in Ethereum. And if you zoom in, what do you see? You see that it started trending down from that resistance. So you can see here, this is the initial break. That's the counter. That's the secondary break. I would say this is the counter. I would say this is the tertiary break. Let me see. Let me start that over. Excuse me. Initial break, initial counter, secondary break. I would say all of this right here, this zigzag, once again, you see a zigzag, would be the secondary counter. I would expect a pivot before a move down. Kind of what you saw in Cardano. I think that we're in, if you look at it in terms of 2 degrees of AB basing and a pivot, Elliott wave, sort of Elliott wave distribution or consolidation, Elliott wave consolidation, right? Let's call it consolidation. You need 3 pairs of AB basing. I think this is your first. I think this is your second, right? And I think this would be the third. So I would look out for that before going short. That's just an aside. My point in showing you this is that you are still in executing some type of zigzag. So you can see here, you have this initial break, or this break of structure, this A wave, right? You have a B wave, which here is a pennant, right? This B wave is quite clearly a triangle of sorts. And so the C wave is quite likely going to be the same size of that A wave, or as we say in Elliott wave theory, it's going to be 1 to 1, 2, 3, 6 deviations of the A wave. So if you take your Fibonacci extension tool, you take A, retracement of B, full retracement of B's all the way down here. It should come between 3691 and 3812, thereabouts. Okay, so that's basically a consistent trading thesis that you can see throughout the market. We looked at Bitcoin, we looked at Cardano, we looked at Ethereum, and we saw very similar things, even down to the price structure that we're currently in. So again, move up, and here in Ethereum, you may be looking at a 9% move up, 9 to 10, 11%. In let's see, in Cardano, you may be looking at a, let's measure it real quick. Cardano, you're looking at anywhere from a 25 to 35% move. I mean, that's sizable. That's sizable. 25 to 35%. In Bitcoin, and that makes sense, right? Because it's a smaller market cap. So it's likely to move more. Bitcoin, you're looking at something like a 9-10% move, something like that. So this is what I'm seeing. Market might enjoy 9, 10, 25, 35% to the upside. Everybody's going to get super bullish, super excited, especially as we go into the new year. People are going to think, oh, 2024 was bearish, 2024 was choppy. Now it's up only. They're going to blind their eyes to any further downside, and that move to the downside, right? The final bit after that pivot, right? After we get up here, you pivot. That is going to catch a lot of people off guard. A lot of people, I promise you. So be very careful if you're watching this channel. I hope you're not one of those people that gets caught off guard after the pump up. Do expect a bigger move down. So don't get caught unawares. I'll probably update this once again. I'll just keep sounding this bell because I don't like when people lose money, to be honest. That sucks. Anyway, that's it for me, guys. I hope this was helpful. I hope this was useful. Like, share, and subscribe. If you got value, consider buying me a coffee at the pinned comment below by using either Venmo, Cash App, or sending me Litecoin, or subscribing to my crypto portfolio consultation service that it's gonna be capped. I'm kind of gauging my bandwidth because it's going to be 1 to 2 hours in person with me per month, and we're going to be able to look at up to 5 assets, balance those assets given your sort of your trading your trading liquidity, and make sure that you get good entries and good exits, right? Buy and sell points for each of those assets per month. That's on my Buy Me a Coffee website. It's $150 per month. So yeah, that's it. Happy New Year. If I don't see you before then, I don't know if I'm going to make another video before then, but if I don't, happy New Year. Stay safe, and I'll see you soon. Bye.